Hey, what's going on YouTube? And welcome back to Tech Conversations. I'm your host Guillermo. It is November 24th. Hope you're all having a great day today. As you can see, it is a green day for me, up $600 today, or about 0.5%. So we'll see what the rest of the day brings us. Now in today's video, I want to talk about how we can make a lot of money by using the victory spread. So I'll show you guys how to set this up and how it works. So before I get into that, all I ask is that you guys hit the like button down below and subscribe, guys. It really helps out the channel. Now, let's talk about our goal here very quickly. So our goal here with this strategy is to benefit from bullish or bearish behavior in the underlying stock for a very cheap price, and of course with limited risk. I always stay away from strategies that have unlimited risk. I suggest you do as well. So the ideal situation here then is you have a stock where, for example, maybe earnings coming up, an FDA approval coming up, a major product announcement coming up, something that will move the stock either up or down, and you basically want to be able to make money here both ways, right? We don't really care if the stock goes up, we don't care if the stock goes down. We're going to be able to make money both ways. So in other words, you want to look for a stock that's going to be volatile. And so for this video, I'm going to be using ticker symbol NNDM, which is nano dimension. Keep in mind that I'm going to show you here is just an example, so don't copy this exact same trade, but I'm going to use NNDM. Now, before we even go into the options here for this stock, we need to check two things. Number one, commission fees. Robinhood doesn't have any commission fees, so we don't worry about it on Robinhood, but other brokers do have high commission fees. The reason we want to check this is because we are going to be opening and closing multiple contracts here that could eat away at a lot of your profit. So always check your commission fees. Number two, we are going to be selling options here. Anytime you sell an option, there is risk of assignment. Early assignment is generally related to the ex-dividend. We want to avoid early assignment. So you should always check if the stock has a dividend. If it does, check when the ex-dividend date is. You don't want to sell options that expire on the week of the ex-dividend. If you do, you want to close out 2 days before. Now, obviously, NNDM does not have a dividend, so we don't have to worry about it. But if it was a stock that had a dividend, you could check on, for example, NASDAQ.com. For example, let's say if we were using ticker symbol T, which is AT&T, we could definitely use NASDAQ here. We would come to whatever stock we're using. On the left, you can go to dividend history. This will tell you when the ex-dividend date is. So if we take a look here for T, the last ex-dividend date was October 7th. But as you can see here, looking at the history, we can see that the next ex-dividend will probably be around, January 8th, around that area. So as long as we're not selling options on that week, we should be okay if we were using T. But again, NNDM itself doesn't have any dividends, so we don't have to worry about that. So now we can go into the options for this stock. So let's go into the options for NNDM. Now, this particular strategy is going to involve all call options here. First thing we want to do is choose an expiration date by which we believe this move will be made, right? So let's say that I think NNDM will make a giant move by, let's say, next Tuesday or something. Then I could choose the expiration following that date for this first contract here. So I'm going to go ahead and choose December 3rd here. And again, this is going to involve call options. So what we're first going to do is we're going to start by selling an in the money call option. So remember, for calls, in the money is where the strike price is less than the current share price. So current share price is 518. That means that these contracts down here with a strike price less than that are in the money options. They're also going to be more expensive. So we're going to start by selling an in the money call option. Usually, you want to determine what price you think the stock will go under if it were to drop. So let's say that if NNDM were to drop, I think it'll drop under $4. Then I would go ahead and sell a call option at the $4 strike. So I'd go ahead and sell a call right here. For selling this call, I'm getting a premium, $1.20 per share. There's 100 shares in each contract. So I'm getting $120 for selling this in the money call option. Now what we're going to do is you're going to go out to a further out expiration date, right? So I'm just going to go ahead and go 1 week further out, so to December 10th. Now what we're going to do is, with some of this credit that we're getting from selling this call, we're going to go ahead and we're going to go and buy some out of the money call options. Okay, so I'm going to go ahead and buy some out of the money calls. So out of the money for calls is where the current strike price is higher than the current share price. So share price again is 517. That means these options up here are out of the money. So what I'm going to do is I'm going to buy some out of the money call options with some of this credit I received. Now you can buy 2, you can buy 3, you can buy 4. It really depends on you how many call options you want to buy. Usually you would want to use option strat to kind of visually see, you know, how your profit and losses change depending on how many contracts you get. And we will take a look at option strat here. But what I'm going to do is I'm going to buy some of these call options at the 550 strike, right? So this is out of the money. This costs $23 per contract. So I'm going to go ahead and buy 3 of these. Okay, so I would go ahead and click on here. I'm going to pay $23, and basically I'm going to use some of the credit I'm receiving from selling my in the money call option to pay for these. And so I'm going to go up here and I'm going to go to custom. This will allow me to kind of modify how many of these call options I want to buy. So again, let's say I wanted to do 3 here. So again, you could do, you know, 2, you could do 3, you could do 4. It really depends on you. I'm going to go ahead and do 3. So take a look at how this chart looks, right? It's pretty cool here, actually. And ultimately, you should be still entering this strategy for a credit. So we're still getting a credit here, $51. And if we take a look here, right, at the profit and loss chart, and again, you should use the option strat, and we will, but just a quick look down here, my max loss is only going to be $31 here, right? That's the most I'm going to be able to lose here is $31. Max profit, though, is unlimited. On the upside, I'll still be able to make unlimited potential profit. What's even better is I'm going to be able to make money both ways here. If the stock were to drop instead, I'm still going to be able to make money. If it goes up instead, I'm going to be able to make money. And again, for a very cheap price, $31, that's my max risk right here. And of course, you can take a look at my break evens. So again, this is called a victory spread. Very rare strategy, but it can come very handy, and it's also very cheap, right? Because you're only risking $31 and you're able to make money both ways with unlimited potential upside here. Look here at this victory spread so we can visually see what our profit or losses will be depending on what date it is, depending on what the price of NNDM is, depending on implied volatility, things like that. So I'm going to go to build, and I'm just going to go ahead and go to I can just go to long call, I guess. And again, we chose ticker symbol NNDM here. So go to 9-0 dimension. We're going to have 2 different expirations here. So we started by selling a call, right? So I can just go negative here and do sell a call here. So again, we started by selling a call at the $4 strike. And we want to be using the front month for this, which we are already. So remember, we chose the expiration for this one as December 3rd. We're selling a call at the $4 strike because we believe that if NNDM were to drop, it would go under $4. So that's what we chose for. Now, with some of this credit we're receiving, we're going ahead and buying some call options. This will be using the other expiration, so the back month expiration. And for that, we chose December 10th. And so we said we were going to buy some calls, some out of the money calls at the 550 strike. And we wanted to do 3 here, right? So this is what it looks like here. So we're still receiving a credit here, $49. And our max loss is $32.46. That's the most that we can lose with this strategy. And our max profit is infinite on the upside, right? And again, what's very powerful about this is we can make money both ways. If for whatever reason the stock decides to plummet instead, right, we can still make money on the downside. So NNDM right now is at 516. Our break evens would be 579 and 453. So what we don't want to happen here is for the stock to trade sideways. We want the stock to either go up or we want the stock to fall down, right? Which is again why you want to use this strategy, for example, with earnings or an FDA approval, major product announcement, something that causes the stock to move quite a bit. But again, the great thing is we don't care which way it moves. It can be up, it can be down. We're going to make money both ways. And again, at a very cheap expense to us, right? Our max risk here, $32. Finally, let's take a look here at how changes in implied volatility affect this. So implied volatility drops. This is kind of what it looks like here. If implied volatility starts to go up, this is what it looks like. So as you can see, we do want implied volatility to go up with this strategy, right? If it starts to go up, as you can see, we start to make more and more. If it drops though, we start to lose more and more. So we do want IV to be going up with this strategy. So anyways, this is the victory spread. If you have any questions about anything I just talked about, feel free to leave them in the comment section below. Check out the Discord, link to it in the description below. Hope you enjoyed the video. Let me know what you guys think, and I will see you guys next time.